Hi everyone, I'm Dean Jessivan, a Regional Director at Hayes Canada. I have 15 years of experience in the recruitment industry for Hayes, with a personal career focus on recruiting for accounting and finance professionals specifically. So, before we get started, I wanted to give you some info about our salary guide. This is our 9th annual salary guide, which gives us a lot of data for comparison. This year, more than 4,000 people took the survey, which is in line with the previous years, and the report covers 12 industries and functions, so there are insights for most organisations. In this report, you will find information on competitive compensation and benefits, trends in recruitment and retention, as well as our analysis here at Hayes and recommendations based on today's labour market. In this report, we'll start off with some key findings for the market in Canada and the accounting and finance industry specifically. Next, we'll focus on some of the biggest recruitment challenges in the accounting and finance industry. And finally, we will have some insights to help you compete for local talent. So now we're going to look at further into business activity and the economic outlook for Canada. As mentioned in the key highlights, 2018 was a strong year for the Canadian economy, and employers expect this to continue into 2019. Nearly half of employers, that's 47%, expect the economy to continue to be as strong in 2019 as 2018, which is good news. This is particularly good news since Canada has been booming, has had booming business activity in 2018 and expects to enter a strong year again in 2019. As well, business activity continues to soar, where 63% of employers expect further business increases again in 2019. Also this year, slightly less than a quarter of employers increased salaries by more than 3% in 2018. When we're looking at hiring trends, over a majority of employers say they plan to increase permanent staff in 2019, and 58% of employers say they plan to increase contract staff in 2019 as well. So, despite the optimism and business growth projections, many employers don't plan on increasing current employees' salaries above inflation rates. Also, employers stated that they under-forecasted hiring needs this year and plan to get ahead of that in 2019. So despite the positive outlook on the economy, Canadian employers are still cautious about salary increases. Salary increases have remained relatively stable over the past 5 years, with 50% of employers expecting to offer this level of salary increase in 2019. In fact, the proportion of employers offering compensation increases of more than 3% has dropped from 41% to 23% since 2013. When it comes to salary increases in IT specifically, the numbers have decreased. Last year, 32% of employers expected to increase salaries in 2018, but only 19% ended up doing so. Looking ahead, only 23% of employers expect to increase salaries in 2019. So, although Canadian employers across all markets are cautious about salary increases, as displayed, salaries are slightly more competitive in the accounting and finance industry. Specifically, 29% of accounting and finance employers have increased salaries by over 3% in 2018, compared to 24% across other industries. And 28% expect to increase salaries by over 3% in 2019. A majority of people feel their salaries are competitive, however, a large number of them would consider leaving their current role for an even more competitive salary. So salary is definitely a focus in the accounting sector. As well, the main places we are seeing a shortage and increased salaries are in the more junior transactional level roles. This is likely due to changes in the CPA designation, where a lot more junior candidates aren't as interested in gaining their initial experience in these type of roles. That being said, as business picks up, it becomes more difficult to find people to fill specific roles. In fact, more than 80% of employers are experiencing moderate to extreme skill shortages in this sector. As the skill shortage is having a direct impact on business, 60% of employers say it's impacting productivity, and 42% of them are saying that it's impacting competitiveness. That's a serious issue, potentially detrimental to business growth. Furthermore, skill shortage contributes to workplace stress pressure, increasing inefficiencies and retention issues. Cost-conscious employers may be hesitant to expand the team or upskill staff. However, doing so is necessary in order to alleviate pressure and caused by this shortage. So now we're going to look specifically at hiring trends in accounting and finance. So furthermore, this optimism about the economy is having a direct impact on hiring plans. Employers expect to significantly increase their permanent workforce in 2019 to address rising business activity, where nearly a majority of accounting and finance employers plan to increase permanent headcount in 2019. When it comes to contract staff levels, there continues to be a strong demand. Although accounting and finance employers don't expect to increase contract staff levels as much as permanent staffing levels, contract staff are still very much needed, in which 23% of employers expect contract staff levels to increase in 2019, as we're seeing across our recruitment business here in Hays, Canada as well. So why are accounting and finance employers hiring more contract workers? When we asked them that question, we found that a majority do so in order to address the current skill shortage that I discussed earlier. Specifically, over a majority of employers hire contract workers for their specialist skills or expertise. The other main reason for hiring contract workers is to address productivity concerns, whereby 33% hire contract staff due to seasonal demands, and 32% of employers hire temporary staff to address short-term volume hiring, e.g. product launches, or project deadlines. So in this slide here, we're going to look at the top roles that are in demand based on what our clients and other recruitment consultants across the Hays business have fed back to us. So the job roles in demand currently are senior tax managers, tax accountants, payroll technicians, financial analysts, finance managers, project accountants. These are amongst the top jobs currently within the industry. Furthermore, companies are trying to get a higher value from their accounting staff than just producing month-end accounts, paying the bills, and general technical accounting skills. Employers are in need of staff that can genuinely help them run more efficiently, where professionals with excellent soft skills are in high demand. The evolution of the modern accounting professional in many organizations is that they are required to be able to communicate effectively with a number of different departments and stakeholders across the organization. They are required to break down the numbers and communicate them in a meaningful way to a variety of different people. Strong analysis, process improvement, stakeholder engagement, and general communication skills are increasingly in high demand. So the ongoing skill shortage is making it harder for employers to compete for top talent. Here we're going to look at some of the main attraction and retention challenges in this competitive marketplace. When we look at the biggest recruitment challenges, too much local competition for talent is the number one recruitment challenge for accounting and finance employers. As we're facing a candidate-driven marketplace, employers are challenged to stand out for their competitors in order to attract the best candidates. The next thing on the list is salaries. So salary is still one of the biggest recruitment challenges for hiring managers, where employers are challenged to offer more competitive salaries in an increasingly candidate-short marketplace. Lastly, a lack of access to candidate networks is also a recruitment challenge. To address this, employers and recruiters need to be proactive and to nurture talent over time. So before we look at hiring in too much detail, we need to understand what the main motivators are for people to leave an organisation. Job seekers and current employers told us that salary is the main factor, where 32% of professionals in this industry considered leaving their company for a higher salary. Furthermore, 32% of respondents are seriously considering leaving their current role, so employers have to make the effort to retain talent or they risk employee churn. It seems many employers are recognising this issue, as over a majority of employers had to increase their salaries outside of their budget ranges to land the talent they wanted to hire. Career progression and development is the next thing on the list, where a quarter of employees would leave their current company if they aren't seeking or if they aren't getting career growth currently. Only 35% of employers offer training and professional development to attract talent. So, how are employers making their current company attractive to recruit and retain talent? Offering competitive salary benefits and or salary packages are the top ways employers can attract talent. This makes a lot of sense given that salary is the main reason for someone to leave their current role, as we've discussed. Next on the list is promoting company culture, which is great. You want to attract people with your culture to show what it's like to work for you and to promote your organisation. However, there are some key elements that a lot of employers are missing. Only a quarter are promoting career, which is very concerning given that career growth opportunity was the number 2 factor that an employee may leave their current position. So we asked accounting and finance employers both how they recruited and which channels were the most effective to attract the top talent in the marketplace. When it came to what people were doing in the industry events and trade shows is now the most common hiring channel. Because Canada's fintech scene is emerging, there are a lot of local events happening, such as Fintech TO and various meetup events going on. While these are great opportunities for employers to establish their brand presence and build relationships with potential candidates, they are not necessarily the most effective hiring channels. In fact, 90% of recruiters go to industry events and trade shows, but only 10% find them effective. So then, what are some of the most effective actual hiring channels? External recruitment, employee referrals, and niche or association job boards are actually the most effective hiring channels, according to our survey. The reason why many accounting and finance employers choose recruitment agencies such as Hayes to help find skilled candidates in a short period of time is that we have market intel, know what the salary expectations are, and how to screen candidates. We pick the best candidates by developing relationships with more passive candidates in the marketplace who aren't necessarily actively seeking for a job. This has been a lot more effective than other common traditional ways, such as job posting and just simply posting on career pages of a website. Next, niche or association job boards and employee referrals have also been effective because of their tailored approach. Now we're going to focus on how to attract and retain the talent, given that we know about the top recruitment challenges employers are faced with. When it comes to compensation, which we've already discussed, what can you do to better align with market expectations? My first stop would always be to talk to your employees, first and foremost. What do they want? A simple survey sent out company-wide can help you get the insights you need so you can prioritize areas where there is the most dissatisfaction or the biggest push for change. If you're not already doing exit interviews for your contractors, start adding that to the offboarding process so you can find specific areas of improvement within the organisation. Again, I would suggest using all of your resources to determine market expectations and candidate priorities. This salary guide is a good starting point, and our recruitment consultants talk to thousands of candidates, both full-time and contractors, a year in your industry or function, so they really have frontline knowledge of what these skilled professionals are looking for. Finally, when you are making market changes, prioritize those most wanted benefits first. Making a big deal about introducing free snacks is not necessarily going to help all of your employees really get what they're looking for. So find out what your employees want, find out what the market wants, and then incorporate these into your plans. Where possible, work with a staffing provider that offers benefits because they will have better retention of great people. And when you're trying to attract the best and the brightest, emphasize the career opportunities available. It's the second top reason ambitious people in the accounting and finance sector are leaving their jobs following salaries, as we've discussed. Having a career path ready to showcase to potential candidates is a big selling feature and advantage, and we've seen that that's really helped retention within certain organisations. And I think a lot of employers are put off by the idea of career growth because they think it's about a focus on promotions and increased salaries. But I think beyond these tired cliches, because that's not what most people are looking for when they talk about progression, most people are actually looking for genuine opportunities to learn, grow and develop within their organisation. To that end, continue focusing on upskilling staff. You can also introduce programs such as mentorship, job shadowing and lunch and learns to make the most of existing resources in your organisation. This is something we actually do quite a lot at Hayes here. This has two benefits. One, you're offering the professional development that people are looking for, and two, you're keeping that knowledge in your organisation, making sure it's passed on to your future company leaders. Finally, target the candidates you're looking for. Career growth is the most important to junior intermediate candidates, many of whom, as we know, are Gen Y. So when advertising these types of roles, it's especially important to emphasize career growth opportunities, given it's very important to this generation of people. Another big challenge for employers is a lack of candidate networks. So how can you reach a lot more people with the right experience and interests? Social media is the best tool we have right now for targeting specific audiences. There are going to be 3 points here, but they all work together. So you can't do one without the other. The first one is building your networks. The more followers or connections, the greater your reach. Secondly, then you need to be sharing the right content consistently to keep your audience's interest. So if you want to attract project managers, for example, you can't just share jobs. You should also be sharing local news, opinions on what's happening in the industry, and project updates. If you are looking at contractors, for example, you would want to promote the new tech you're working with and success stories from your current or previous contractors, as an example. And number 3, while you're bringing them in with this great information, you can also demonstrate that you're a great place to work, so promoting the company culture. Share company wins, promotions, new starters, so that when you have a job opening, people are already interested in your organisation as a whole and have an impression of what it's like to work there. It's also essential to focus on creating a great employee experience. Your employees' observations and perceptions about their employment at your company can also greatly affect how well you attract candidates in general. So now I will briefly summarise our salary guide and then show you how you can take action today to start making some of these improvements that we've discussed. So just to recap, here are some of our key findings from the salary guide. There's a positive economic outlook for 2019, but salaries remain steady across industries. Less than a third of accounting and finance employers expect to increase salaries by more than 3% in 2019. As a consequence, employers risk a high employee churn, so it's essential to ensure your offer remains competitive by keeping up with changing trends and reviewing compensation. Secondly, there will be a hiring frenzy to make up for previous years. Canadian employers ended up hiring more people in 2018 than anticipated, so they plan to hire more next year to get ahead of what is expected to be another busy year. When it comes to accounting and finance, nearly a majority of employers expect to increase headcount in 2019 again. Thirdly, businesses are losing out on productivity because of the skill shortage. Fortunately, employers are recognizing that hiring temporary workers have a direct impact on productivity, as well as upskilling staff, which is also a significant area as well. The final one here is AI and machine learning, which will continue to impact all business industries. The impact technology has been having on accounting teams has also been the increased efficiency and automation has had on the clerical functions in the department, and also the ability for these functions to be handled remotely by third parties or centralized teams outside of Canada. These technologies can also streamline the hiring and onboarding process so companies can be more effective in their business operations. Employers should invest some time now to assess and implement the right solution to see greater returns in the future. So here are some actions that you can take away today immediately. Firstly, request your copy of the salary guide and make sure you are paying market rate in salaries. Assess your current training programs. Where can these be enhanced to support career growth? Promote growth and training plans when hiring. Consider building this into your value proposition. So that's all I have planned for this piece of the webinar. This is essentially just a snippet of our findings. To get even more information and insights or request a salary guide, you can request it either from your recruitment consultant or visiting the website that is flashed up there. So we now move on to our question and answer sections. We've got about 10 minutes or so now for any questions that you guys have. So you need to just send your questions in to the chat box and I will see whether I can answer them for you. So we'll give it a little bit of time for questions now. Okay, I've just had one question come through here, which is this. So I know lots of people look for new jobs in January. How do I stand out to these people? So it's a little bit of what we just discussed here during the webinar. So I'd say if you're looking to hire in January, it's really about getting ahead of the game. So promoting your organisation now, like definitely not waiting till January. So I think maybe a mistake a lot of employers make when they're trying to hire is they will hire literally at the time they need the person. So if you were looking to hire in January, I'd probably be like starting to do some of the things we discussed now. So for example, putting your advert up through the social media channels we discussed. Make sure that your value proposition is out there and that you're promoting the company culture and any programs that you're putting into place. If you're doing it directly, like putting the job advert out now, if you're going to do it through a recruitment company, contacting the recruiter now ahead of time so that they can start seeking the the talent ahead of time. It's actually a common myth. A lot of I was talking to a client just yesterday who said to me that she thinks that candidates tend to stop looking for work over the Christmas period, and it's actually quite a common myth in that most candidates, let's say, for example, if they are looking to move on from their jobs, they may actually be doing their job seeking over Christmas because they've either got time off or it's a quieter period for them generally. So if you are looking to hire new staff into the new year, my advice would probably be to get going with that right now over the next month to get yourself ahead of time, because also on my point, when January comes, everyone will then be like putting their hires up and all competing for the candidates at the same time. So I hope that answered that question. So I can't see any more questions in here actually in the first instance. So I think from my side, that's it from me. If you have any questions, please send them in, and we will reach out to you and we'll answer every single question that comes out of this. And I think I'll just pass back over to Heather to finish off then.
Thank you, Dean. Like Dean said, if you have any further questions, you can email us at marketing@hays.com, and we will reach out to you and answer any questions you have. The salary guide is available in hard copy from our consultants, so if you reach out to your local office, they can arrange to deliver a hard copy to you. The digital copy will be available online from January 14th, so you can request that through the hays.ca/resources page. Thank you.